Hi, and thanks for joining today's Share Cafe ASX Hidden Gems webinar. We've found four cracking companies, some real hidden gems, and over the next hour, they will each be presenting their individual investment proposition to you. It is your chance to hear directly from the leaders of these companies and make decisions on which ones you want to keep an eye out on or research further. It is also your chance to ask them questions. If you do want to ask a question, write it in the Q&A button at the bottom of your screen, and I'll put it to them at the end of their presentation. Okay, let's get into the presentations. Firstly, I would like to introduce our first presenter, James Garner, CEO of Kazia Therapeutics. James, over to you.
Ladies and gentlemen, good afternoon. As you've heard, I'm James Garner. I'm the Chief Executive Officer of Kazia Therapeutics. And it's terrific to be able to mark the beginning of the second quarter of 2022 here today on Share Cafe's Hidden Gems series. This is a really exciting period for our company, and I want to talk about some of what we're doing. You can jump ahead 2 slides, please. Just to begin by orientating everybody to Kazia. I know it might be a familiar name to some people on the webinar today and a new name to others. We are an oncology drug development company. We work in the business of developing new cancer therapies. And we have 2 drugs in our pipeline. Our lead drug, as you can see on the left-hand side of the slide here, paxalosib, that's currently in a phase 3 human trial for brain cancer, and particularly for a disease called glioblastoma, which we'll say more in a moment. Now, those who are familiar with biotech companies will recall that there are 3 phases in the human testing of new drugs. So a drug that is in phase 3 is near the end of the process, and we're expecting final data from that study next year, calendar 2023. So we're really getting to the business end of things here. We do have a second drug in our pipeline, EVT-801, in the middle of the slide. I won't talk about it too much today. It is in phase 1 human testing, but this is something that really sets our company apart from many companies our size. We have 2 genuinely different drugs in our pipeline, gives us a real degree of diversification, which many single asset companies lack. Moving on to the next slide, please. Just to give a little flavor of glioblastoma, which is the disease we're primarily trying to treat with our lead drug. This is one of the most aggressive cancers known to modern medicine. It's a disease that can affect anybody at any point in their life. There's about 130,000 cases a year worldwide. And with best available treatment, the average survival from diagnosis is about 15 months. And unfortunately, that figure really has not improved this century. And as you can see from some of the characters down at the bottom of the slide here, this is a disease that can really affect anybody at any stage. And although it's not as common as lung cancer or breast cancer or bowel cancer, this is still conservatively about a $1.5 billion US annual market. So very significant commercial opportunity for a company like ours. Next slide, please. We currently treat glioblastoma like this, and this is how it works just about every country in the world. We try to remove as much of the tumor as possible surgically. We then give these patients radiotherapy, and we then treat them with a drug called temozolomide. Temozolomide's a real old school chemotherapy drug. It's a pretty tough drug for patients to take. It's been around for 20-something years and now off patent, and just about everybody makes it. It's the only FDA-approved drug treatment for newly diagnosed patients. Trouble with temozolomide is it only works for 1 out of every 3 patients. And for those 1/3 of patients, it provides some benefit, but for the remaining 2/3, the drug is essentially useless. And those are the patients we're really targeting with paxalosib. Next slide, please. Now, paxalosib is part of a class of drugs called PI3K inhibitors. The reason I bring that up is because there are 5 FDA-approved PI3K inhibitors already on the market. So this is a really well-tested, well-proven way of treating cancer. The unique thing about paxalosib is it's the only one of these drugs that can cross the so-called blood-brain barrier. It's the only drug that can get into the brain. And if you're treating brain cancer, that's a must. So none of these other drugs are ever going to be treatments for brain cancer, but paxilosib has this unique advantage here, which really sets it apart from anything else in the global pipeline. Next slide, please. And the good news is we've got solid clinical data to suggest that the drug works. This is the high-level data from a phase 2 study that we completed at the end of last year. The light blue bars show paxilosib. We're looking at 2 measures here: progression-free survival, a measure of the ability of the drug to delay growth of the tumor; overall survival, a measure of the ability of the drug to extend life. And as you can see, there is several months of advantage here compared to temozolomide. Now, that may not sound like a lot, but in a disease like glioblastoma, several months is everything. Sadly, very, very few cancer drugs cure the disease they're treating. The best way we have to cure cancer is still to cut it out in most cases. But we've got market research data that we've put out in the public domain showing that even a couple of months of survival benefit here translates to an extraordinary market uptake, 80 to 90% penetration here. So really anything that moves the needle for these patients, even a little bit, is likely to be a very successful commercial product. So we've been very, very heartened by this data. I think this really looks extremely encouraging in the context of this very, very treatment-resistant disease. Next slide, please. So we're in phase 3, and that's the top arrow in this slide. Here, as you can see, glioblastoma in phase 3. But we also have a huge amount of other work going on with this drug. As you can see from the rest of the slide, we have work going on human trials in 3 other forms of brain cancer: DIPG, a rare childhood brain cancer, horrible disease, no FDA-approved drugs; primary CNS lymphoma, another form of brain cancer; and brain metastases, which is cancer that has spread to the brain from elsewhere in the body. And so really there's an extraordinarily diverse program of work going on here with paxilosib. And as you can see on the right, we're working with some of the absolute best in the business. Hospitals like Memorial Sloan Kettering Cancer Center, Dana-Farber Cancer Institute, those are 2 of the top 5 cancer hospitals in the world. St. Jude Children's Research Hospital in Memphis, Tennessee, arguably one of the top children's cancer hospitals in the world. Some absolutely A-grade collaborators that are supporting the program here, not just by working on the trials, but also in many cases by co-funding some of this work. So really broad program with absolutely first-class partners. Next slide, please. Just a couple of slides on Kazia as a business. We are actually a super lean virtual company. Our board is shown on the right, just 3 non-exec directors and myself. Our management team on the right of the slide here, 2 of us based in Australia, 2 in the United States. That really just reflects the weighting of our market and a lot of our trial activity. But we do have wrapped up in this relatively small number of people, an incredible depth of experience in international drug development. And so we really punch above our weight in terms of our resources, and about 80 cents out of every dollar we spend goes directly into our clinical trial activity. We don't run a huge head office and all those expensive indulgences. We spend our money on drug development. Next slide, please. And here's just a snapshot of our financials. This is 2021 shown on the left as our share price. We'll update this now for first quarter of this year in due course. Look, to be candid, it's been a shocking start to the year for the entire biotech sector. But we're really quite comfortable here because at the end of the day, our market opportunity is driven by the patients who get our disease and how well our drugs work. None of those things have changed. And so we're really hoping and expecting for the biotech sector to bounce back in the second quarter. And we're in a good position to leverage that when it does. We have, as you can see here, some cash at bank that sees us through to fourth quarter of this year, and some really good quality, fundamentally driven investors on our register that have been incredibly supportive to the company over several rounds of financing over the last 3 or 4 years. Next slide, please. And finally, companies like ours live and die by the catalysts that we can deliver. And this is a very busy year for our company. Been a quiet start to the year, just frankly, because it's been an adverse market for biotech companies. But as we head now into the second quarter, there is an awful lot happening. We expect to be opening our phase 3 study in Europe and China over the coming months. It's already running in the United States and Canada. So this expansion will really give us access to a much broader pool of patients. It's recruiting gangbusters already, but I think this should really pick up the pace. And then, cut a long story short, lots and lots of data through 2022. Many of the studies that we're running will be reporting interim or in some cases final data. And this starts as soon as next week. We'll be attending the American Association of Cancer Research annual meeting. It's in New Orleans, Louisiana this year. First time it's in person for 3 years. And we do have several abstracts for both of our drugs that have been accepted there, as we've said publicly. So starting next week, we're going to be sharing new data from our pipeline. And I think that's really going to kick off, hopefully, a very, very busy second quarter for the company. So, ladies and gentlemen, thank you so much for the attention. As I say, an exciting time for the company. I'd be delighted to address any questions that come up.
James, thanks. A great presentation as always, and definitely you love an MD who's excited about not just the company they work for, but the progress that company is making. An astute attendee to the webinar has asked the question, you've recently been to the US. What was the mood temperature from investors over there, and what were the common questions investors were asking?
Yeah, look, it's fair to say this has been a tough start to the year. As one of the attendees has said, I was in the US just a couple of weeks ago. One of the analysts I met told me it was the worst start to a year he had ever seen in his career, and he's not new to Wall Street. We've got about 150 odd NASDAQ listed biotech companies right now that are trading at less than cash backing, which is really, really unusual. So it's been tough, and in fact, Kazia has in many ways got off lightly compared to many companies in the sector. There are companies that are down 80% off their highs. I think a couple of things really stand out for us. We were never overvalued in the first place. I think I would argue perhaps to the contrary. And so I think, that really helps. A number of investors point out that late stage companies like ours are really in a strong position here. We could be going to the FDA looking for a marketing authorization within the next 18 to 24 months. And that's very imminent for a biotech investor. So we're in a very, very different position from those companies that are still in the lab or still in very early stage trials. And finally, I think the quality of the work really stands out here. The kinds of hospitals that we're collaborating with, the rigor of our trial design, the quality of the data that's likely to come out of that. All these things really speak to investors. And I think as we move into the second quarter, I think everybody's hoping for a rebound in biotech, but it will be the quality companies that I think are favored there. And I think we really want to try and position ourselves to ride that wave.
A question here around the number of brain cancer sufferers. Is that up relative to cancer sufferers, sort of more general numbers?
Yes, sad to say, brain cancer and glioblastoma in particular is getting more common. And nobody exactly knows why. It may be that we're getting better at diagnosing it. The people have suggested everything from how often we fly in airplanes to cell phone usage to you name it. Nobody exactly knows because we don't really understand the causes of this disease fantastically well. But yes, this disease is getting more common. And unlike most cancers, the prognosis isn't getting better. So if we look at breast cancer, about 90% of breast cancer patients will survive at least 5 years after diagnosis, more than 5 years after diagnosis. With prostate cancer, we've got really very good at treating that for most patients, such that people even say now that patients are more likely to die with prostate cancer than from prostate cancer. But we haven't made any real progress in brain cancer. So this is this is a growing problem. It's something that we, as an industry and as a medical establishment, we really need to turn our minds to.
And in terms of the coronavirus or COVID-19, has that had any impact on recruitment, or because of the importance of the clinical intervention and the work that you're doing, that you've been able to sort of navigate your way through it?
It's been mostly the latter. These are patients that can't wait. They can't be told to just sort of go home and come back in 3 months. Somehow their care has to continue. And so generally these kinds of patients are the last to be compromised in something like the current pandemic. There's no doubt with a couple of our trials in a couple of our centers, a couple of our hospitals, it's had a temporary impact. It's maybe there's a study here and there where it's delayed us by a few months here and a few months there. Our phase 3 study in glioblastoma has really not been touched. That's been racing ahead. Some of these studies in areas like brain metastases, it's maybe slowed them down by a few months, but by and large, the impact has not been substantial. And of course, we're really grateful for that.
Last question, and quite an interesting one. The long-term plans, is it license? Is it takeover? Is it distribution? Enter a distribution agreement, do it yourself, or are you just keeping all the options open?
Look, I think we're really trying to keep all options open here. We've got exactly 2 objectives for Paxalis. And one is that we really think this drug offers something to patients. We want to make sure that patients get access to it everywhere in the world. And second, we want to return value to our shareholders. And anything that helps us do those 2 things, we're going to welcome. We actually already licensed the China rights to this drug to one of China's leading pharmaceuticals last year. We got $11 million in the upfront payment, up to $281 million in milestones and high teen royalties on that deal. One of the better oncology partnering deals ever done in China, if I may say so. So China, we've already taken the licensing route. We've kept other territories open just because we think this is going to be a much, much more valuable drug with phase 3 data. But we're always having those discussions, both internally and with potential partners. And I think at the moment, we're just keeping all our options open.
A company keeping all its options open with plenty of news flow and moving right into really important stages of your drug development. James, thanks for a great presentation.
Thanks so much, David.
Now, I'd like to introduce Paul Bibby, Managing Director and CEO of Akora Resources. Akora stock code is AKO. Paul, the floor is now yours.
Thank you very much, David. Afternoon, everybody, or good morning if you're in Perth. Thank you. At Akora Resources, we see a premium grade iron ore future with a low capital cost, low operating cost, direct ship ore, DSO startup. Next slide. We have 3 project areas in Madagascar, which is our focus for the iron ore that we have. 2 initial projects that we had, Tatra Marina and Ambody Lafa, are now our future focus. And since acquiring those, we've got Benjy Soper, which is our focus project in south central Madagascar, some 250 kilometres from the port towns of Toliara and Morombe. The attraction for Benjy Soper is the outcropping iron ore along the 6-kilometre strike at surface, the image in the top left-hand corner of the slide. Those lumps of iron ore at surface, quite significant lumps, but also some finer ones, are grading 66.7% iron. And in the trenches that cross the 6-kilometre strike, in those trenches, we can see both lump and fines iron ore, the 2 main products for the blast furnaces, grading again around 64 to 68% iron. And at Benjy Soper, it's because of this that we see a low capital cost, operating cost DSO startup, focusing on both the outcrop and the weathered zone iron ore. Next slide, thank you. On the right-hand side of the screen is the magnetic intensity image. We walked the ground, some 400 kilometres, 50-metre spacings, and what we see from that work is a very intense magnetic anomaly over 6 kilometres of strike from north to south on our tenements, the very red and orange intense area there. Over the top of that are the green dots for our drilling. We've drilled 63 holes in the last 15 months for some 6,000 metres drilled. And this has confirmed that the iron mineralisation at Benjy Soper continues below the high-grade outcropping rocks at surface to depths of 300 metres down dip and still open at 300 metres, along the full 6 kilometres of strike length and across the widths of the strike up to 750 metres, particularly in the south, and true thicknesses of the iron formation of 50 to 170 metres across and down dip. These results indicate a significant iron ore body, and when you consider we've only drilled some 30% of the 6 kilometre strike, there's a lot more to be proven over time. And these results are only on our main tenements. We have other tenements 10 kilometres to the southwest, which we have yet to do work on. So quite a promising future at Benjy Soper. Next slide, please. Next two slides are looking at some of the cross sections from the drilling. This is a cross section in the northern zone. The pinky brown colour there is the iron formation, a true width of 67 to 70 metres in thickness, down dip to 300 plus metres below surface. And at surface, we're seeing high grade iron ore, 64% grades there on those two drill holes. The benchmark grade that we hear the iron ore price about is for 62%. And currently that's around about $155 a tonne. So for 64% DSO, you get a premium over and above that benchmark grade. And our plan is to selectively mine this high-grade surface zone as the startup at Benjy Soper. Next slide, thanks. A cross-section in the central zone. The iron formation is not dipping as steeply. It's still dipping to the west. Thickness there of 70 metres. It's open at surface and at depth. And the structure is ideal for a low-cost, low-strip ratio mining operation. Next slide, please. Last week, we announced the first half of the Maiden Resource at Benjy Soper. This resource is only focused on the northern and central zones and has been completed in 15 months since we IPO'd on the ASX. The total resource is 84.5 million tonnes at a concentrate grade of 67.6%. So a premium grade product for that 84.5 million tonnes and a Davis tube recovery result of just on 40%, which compared to existing operations and developing projects is a very good number. Often it's half of that, which is a good result for us, and it means less tonnes mined for each tonne of product produced. As I mentioned, the first half of the resource is only on the north and central zones, where we have drilled 25 of the 61 drill holes that intercepted iron ore. The southern zone exploration target is estimated by our consultants to be between 50 and 100 million tonnes at comparable grades and recoveries, and we expect to announce that in the coming weeks. And we're looking at a number probably around the 80 million tonnes in that southern zone. Next slide. Again, we've gone back to the magnetic anomaly, the drill results there in the high intensity magnetic zone there. Taking that across to the central image, which is a plan view of the geological interpretation of the resource. The north and central zones were reported, both around 40 million tonnes each. And if you look in the bottom there, the area of the southern zone is significantly larger than the northern and central zones. And that's why we're expecting quite a significant maiden resource result for the southern zone. Next slide, thank you. This is also another image, an oblique view, to give you some size of the volume in these areas. The northern and central zones there on the left-hand side, again, around the 40 million tonnes. The green crosses and lines are the drill holes and the drill hole results. And what you can see there is that the expectation is for more resource at depth, but also to the west in both the north and central zones. But looking at the southern zone, where we're going to report in the coming weeks the resource, it is a larger surface area and quite a significant cross sections. We're seeing cross sections there of 150 to 160 metres. So quite a large resource is expected from that southern zone. Next slide, thanks. In parallel to the drilling work over the last 15 months, we've also conducted product grade trials. These are trials where we've crushed the drill core to 2 millimeters, which is a fine iron ore product, and we've crushed it and ground it finer to 75 microns. And what we're seeing are high to premium grade products at coarse sizes relative to existing operations and developing projects. On the left-hand side are drill core results there for one of the composites going down to 37 meters below surface. At surface, a grade of 59%. At depth of 32 to 36 meters, a grade of 63%, which is DSO product. When we've combined all of these drill results into the one table here, what we're finding is that head grades from 30 to 45% iron in the iron formations readily upgraded a 2 millimeter crush, a fine iron ore product, to 64%. Again, a high grade iron ore outcome there. And at 75 microns, we're achieving 70% iron ore at 75 microns. Existing projects around the world, whether that's in Canada or other parts of Europe, they're grinding to 15 and 20 microns. So more capital, more operating costs than what we would expect at Benjy Soper to get an equal, if not better grade product at 75 microns. Not only is the iron grades high, the silica and alumina, the impurities, are low and in specification, and phosphorus and sulfur are very low. As you can see in the numbers at the bottom there, 002 for phosphorus and 005 for sulfur at very good mass yields. Next slide, thank you. So at Benjy Soper, we're anticipating a high-grade direct ship ore startup. Direct ship ore means that the ore in the ground is on specification. It needs to be mined by conventional methods and crushed to size and shipped to the customer. So low capital and operating cost startup at Benjy Soper, focusing on the outcrop and the very high-grade surface zones. The drill core boxes here, you can see grades of 64 to 68% iron. These will just be crushed to produce a lump product, which is 30 millimeters in size, thereabouts, and a fines product and DSO, average grade potentially around 65% iron, a good margin above benchmark. Next slide, thank you. After producing the product from the high-grade areas using selective mining, we'll then move into the lower grade iron ore that we're seeing a cross strike and a long strike. And from the weathered surface zone, this readily upgrades to produce a 65% fines product, and then at depth, a 62% fines. The next slide, thank you, David. So what we're seeing is lower grades of averaging 27% here, upgrade to 71% iron ore. Pure iron ore magnetite is 72.4%, so this is a very high grade product with low impurities. The attraction for this product is this is what's going to be sought after and demanded by the steel industry as it decarbonizes. So Akora is very well placed to feed the green steel future. So I think, is that the end there, David, for me?
No, keep going. If you've got a few more slides.
Okay. Excellent. So the next slide, thank you. So what's next? We've proved up half the resource at 84.5 million tonnes, and there's more to prove. The southern zone will be out shortly, and the target is between 50 to 100 million tonnes there. We'll then do further mineralisation and resource work over the year, but importantly, we'll start studies. Now that we know what the size of the ore body is, we'll start doing the studies on transport logistics, the port, mining and processing, operating and capital costs, and power, which likely in Madagascar will be solar energy. We'll also do some geological work on the near Benjy Soper tenements, which has got the potential to expand the resource beyond what we've already reported and better understand the opportunity for Akora to provide the green steel future. The last slide, please. So in the resource that we've already reported, we're seeing 64% iron at surface, which is potentially DSO, higher than the benchmark grade of 62. We can produce a high-grade fines product at a crush size of 2 millimeters and a premium grade product better than 68% at a 75 micron size, which is coarser than most with extremely low impurities. On the top right-hand slide there, it's the iron ore price over this year. You can see it's improved quite substantially for all grades of iron ore, 58, 62 and 65. Our attention is the 65% iron price, which at the moment I think is about 185 US dollars a tonne, which would be a wonderful price if it is maintained over the next years as we bring Benjy Soper into operation. So thank you everyone for your time.
Thanks, Paul. A great presentation. Question without notice, a high-grade iron ore project, outcropping with significant resource and mineralisation upside. Yeah. How do you get your hands on a project like that in the first place?
Very good. My colleague John founded the company. We had those projects on the East Coast. It was hard to get funding for those sorts of projects because they typically have higher capital and operating costs. So John is a prolific reader. He was aware of the history of Madagascar and the iron ore project, which was sought after by some European countries during the First World War. He then did some more digging and found that the tenements were owned by a Canadian, US company. Their focus was on coal. He made an offer to acquire those tenements, and which is what we've done. And recently we completed the deal, and then remain 5% shares. I continue to be a shareholder because I like the opportunity and the future prospects for the company. So by doing some reading and then by doing some good research to track down the owners of the tenement, it's been very beneficial for all of us.
Oh, and clearly further opportunities ahead.
Yeah.
In terms of, and I know the studies haven't been done, so this is a very conceptual conversation, but getting the product to the coast and the best port to ship from, has that been thought through, or is that the work to be done?
Very preliminary work, David. We've travelled the ground to look at it. We understand Toliara is a port now. It's a port for a range of products, including mining products, but also Morombe, which is further to the north and probably a more direct route for our project. This is the main study we have to do this year. It's one of the questions I get asked the most. You know, what are the logistics like? Because moving tonnages of iron ore is really a logistics project as much as a mining project. 250 kilometres to the coast sounds like a long way, but I can assure you that the projects here in Australia in the Pilbara, you know, they're sort of 300 to 400 plus kilometres from the coast, not all on rail. A number of those are trucking. Brazil, which is a big player, 1,000 kilometres. Kumba in South Africa, 700 to 1,000 kilometres. So there'll be obstacles in that 250 kilometres, but relative to others, achievable.
And a final question, Offtake. When do groups, maybe for an educational, to educate the audience, yep, when do groups from an Offtake perspective start talking to yourself about potential offtake, and how positive do you think that interaction will be?
I can only speak about my experience with Benjy Soper. They typically start as you're getting close to announcing your maiden resource, because the maiden resource is the definitive result from all of the drilling and exploration work. It identifies how many tonnes and what the grade is and what the opportunity for products are. So that's when they start, and soon after you have the resource in place, you have a chance to realise an offtake agreement or something similar. So that's, for us, is quite a major milestone, and you know, those discussions we hope will be progressing, and something might come from that.
Thanks, Paul. A great presentation, a really interesting project that I think shareholders will continue to watch with interest over the coming months ahead. Akora Resources, stock code AKO. Thanks for your time, Paul.
No, thank you very much, and appreciate everyone's support and interest.
Thank you. I'd now like to introduce Colin Skidmore, CEO of Stelar Metals, ASX SLB. He's our next presenter, and Colin, the virtual floor is yours.
Hello, good morning, everyone. Good afternoon if you're on the East Coast, where I am. And welcome to my little world at Stelar Metals. Stelar Metals is a very new exploration company focused on battery metals. We listed a couple of weeks ago on the ASX. Can we slip past a couple of slides? Disclaimer, of course. So as I say, we are very new, and we have a dedicated focus on battery metals. We feel that this is a very important area to be in. From an economic perspective, this is in very high demand, And it's required for this clean energy transition that the world is screaming out for and desperately requires. We have a number of projects. They're all focused in South Australia, which is one of the best places to be if you're in the battery metal space, particularly in copper and zinc. Something like 65%, 68% of all copper actually comes from South Australia and the Australian reserves there. Our board and management's got lots of experience, and we'll go through this in a little bit more detail. But maybe let's just jump across the next slide and continue. So, as I say, we're a brand new company. We listed on the 18th, I think, of March, and we put out about 50 million shares at 20 cents. Our share price, just I watched just now, it's around about 30 cents at the moment. And this really is just underpinned by the fact that people recognize that battery metals is a really important place to actually be. We managed to raise our maximum subscription of $7 million, which provides us with plenty of cash to get out there and actually do some work. And we have an enterprise value, which is quite low at only $3.2 million. We've got some interesting spreads of shareholders and some good people behind us that will allow us to continue forwards with this company. Next slide, please. Okay, so the projects. So we tried to pull together a balanced portfolio of projects. These have mostly been acquired over the last 5 years or so by Stephen Biggins, who's our chairman. Stephen and I used to work together at Core Exploration, Core Lithium, where he's still the CEO. I left a number of years ago just so we're getting into lithium. But we've always been picking up tenements like these when they get dropped. The area within the Gawler Craton and the Adelaide Fold Belt in South Australia, as I said earlier, was where most of the copper actually comes from. It's the place of the big boys. So BHP, Oz Minerals, FMG, bigger explorers like Coda, DGO, they're all out there. Brilliant on the zinc side of things. So we have some projects which are iron oxide copper gold, like Evelyn Dam and Torrens and Gunson. Sedimentary copper, and in South Australia, there is a big push for sedimentary copper because the geological situation and environment is very similar to Central Africa, where you have these large sedimentary copper deposits in the DRC and places like that. And then on the zinc front, we're looking at the Adelaide Fold Belt. We're close to Beltana, which is one of Brillia's projects, and we have some carbonate-hosted projects that are over there. For the exploration budget, there's about $5.7 million, which is allocated for the next couple of years. And of course, we need some money to keep running the company. Next slide, please. So why battery metals? Well, each one of those little electric cars that we drive around has got about 94 kilos of copper. All the windmills that we need to run things, to join things together, requires those transmission lines. That's a large amount of copper that is required. And there are some big mines in Chile. There's some big mines here in South Australia. But in general, there is a big shortage. And because of that, the copper price has been going up. Combine this with the fact of other global current events. We pick up the news every day. And there is a big requirement to source this materials which are quite strategic locally, and make sure that there is that strategic supply. Now, zinc we've also included here. Zinc is an interesting one. I used to work for Pasmenco. We used to be the largest zinc producer back in the 1990s. And, it's used for galvanizing, and it really had sort of a bit of a checkered past. But these days, zinc has potential as a new battery metal. There's a number of companies, if you do some Google search around, countries like Zinc Air, are producing or trying to produce new forms of batteries which don't use lithium, and it'll hold a charge longer, it'll hold a bigger charge, and more importantly, once it gets punctured, it's nowhere near as volatile as what lithium is. So, it could make a much safer car and way to go forwards. This is new technology, it's still emerging, it's not quite there yet, but we believe that it could be an important part of the future. We're not necessarily constraining ourselves to copper and zinc, and very keen to look at all sorts of other projects along the way. But for initially, these are the ones that we're going to be looking at. Next slide, please. So this is who we are. So Stephen Biggins, who's the chair of this company and the CEO of Core Lithium. Core Lithium's done rather well in the last year or so, and are about to go into production producing lithium with some takeoffs with Telstra. Tesla. I'm the Chief Executive Officer, very much an exploration geologist, and have been around in South Australia for the last 30 odd years. I've been the Vice President of Uranium One, a big global uranium company, and had projects all over the world, but home has always actually been South Australia. We have Jeffrey Webster, who's an engineer, South Australian, and it's good to have someone who's an engineer because they do put a bit of guidance and rigor to us more airy-fairy exploration geologists. Will, though, is an exploration geologist, and he's on the board and is the CEO of Todd River. And then we have Jack, who's our company secretary and CFO. Over the page, please. Okay, so we've got a fully funded exploration program which we've set up for the next couple of years. Over the first quarter, I've been working hard on the land access, regulatory approvals, and we hope in Q2 to start drilling at some of our projects, to start building up some of the other projects by collecting geophysics, soil surveys, mapping, as appropriate to generate up those targets. And by the time we get to the end of this year, it's really going to have to be take stock. What were the results of that drilling programs that we've had in the first part and even in the latter part of this year? And we also will be looking at other projects as they come to mind. And I've already had a couple I've got to look at the moment. So it's exciting times, and especially for a new company. Next slide, please. Okay, we can skip this one. Let's go straight into it. Now, as I said, we have 5 projects. Really, I'm just going to focus on 2 today. Let's start off with Evelyn Dam. This is probably the largest untested gravity anomaly in the Gawler Craton. It was previously a BHP project. They picked up the project. They spent a rather large amount of money buying it off Archer. They collected some more geophysics. They refined up the target. And as big companies do, they change tactics. Boardroom decisions are made in London and long places away without really reflecting on an individual project. So this one got dropped. At this point, Mr. Biggins, our CEO, picked it up, chairman, rather picked it up, and he went into a joint venture with Rio Tinto, who were also interested. So it's a large gravity anomaly. It's big. It's about 5 kilometers in diameter, and we've been doing some modeling with it, and there is some high-level protuberances which come up in the top surface of this anomaly, which has not been tested. Rio Tinto, when they did a joint venture with Stephen, did manage to drill 1 hole, but they drilled it vertically, and they didn't really pay a great deal of attention, particularly with a refined model. The modeling they used was just on filtered data and using relatively low power computing, whereas nowadays, just a couple of years later, some high-tech stuff is around, so 300 CPU computers are quite standard things to process this data. So we have a new hole that's been planned, but let's have a think about the actual hole that was drilled. So this was drilled about 2 kilometers from where the gravity anomaly is, but it still managed to get in the upper sequences. There was visible native copper. There was reduced zones in a hematized Pandura sandstone cover. But when you come down into the basement, we start to see zones of sericite, chlorite, hematite alteration, and then large veins of fluorite and pink carbonate, all very indicative of being in a distal position from an iron oxide copper gold mineralizing system. Now, Olympic Dam and Carrapateena, they're 50, 100 kilometers more away from where this is. So this is not just something that's reflected from that. This is something which is local there. The magnetic data set, we have some cross-cutting later dikes. They're known as the Garner dike swarm in South Australia. These have all been disturbed as they were later intruded into this area, and they wrap around and are completely disassociated with the gravity feature. Again, just for emphasizing that there is something which is there, unanswered, that has never been tested. So it's a bit brave on a brand new exploration company to not go and just drill a couple of meters from the pit walls and with some shallow, cheap drilling. We're going to put in a deep diamond hole into this to test it once and for all. And it's high risk, but the returns are potentially very, very high. It's a 100% owned project. All of our projects are. And this one has got all the heritage clearances and agreements in place already for multiple drill holes. So exciting times, and we do hope to be starting this one very, very shortly. Next one, please. Okay, so balances out, slightly lower risk. Linda zinc prospect. So we're now up in the Adelaide Hills. This was another ex-BHP project. They were doing some soil sample, sediment sample streams in the 1980s, and discovered some pretty high zinc numbers. It's located about 80 kilometers away from Beltana in the Adelaide Things, and it's in the same geological setting. So we're in these carbonate rocks within the Adelaide Fold Belt, and it provides a very unique geological situation. As I say, it's quite similar to what you might see in Central Africa. So there are some copper bits about. There are large diapirs which have come up through, which again just add to the focus of mineralization. But when you come over to Linda itself, the BHPs, they went out there and they did some mapping. They recognized at surface some large pods of zinc mineralization, gossans that sticked out at surface. And they did in 1983 come in and do some drilling. Unfortunately, they couldn't get up the hill with a little two-wheel drive drill rig. And they put in 20 shallow 25-meter holes, which came back with some quite interesting results. They then put in 2 diamond holes, a bit deeper, but again, they were nowhere near where these actual pods of mineralization were. So I can't release those results yet because they need to be converted to JORC, but we will be endeavoring to do that in the near future. Perilia then came in and did some soils back in about 2010, something like that, and have expanded the footprint of anomalism to quite a large area. So it's now over several kilometers. The plan here is to head out relatively soon after Easter, start to map this, start to try and prove up these original BHP results, make sure we have enough confidence and we can release those to the market, expand out on these soils, and we hope to start drilling later in the year. Next slide. Last slide, lucky last. So we've got an extensive and fully funded exploration program ahead of us. There's a lot of exploration potential that's there. Some of these are high risk, some of these are not. Some of the other projects, which I haven't discussed yet, are still in application. And we have some very large projects where we'd just be collecting geophysics one day, hopefully, to attract a partner who'll be much bigger to come and have a look at it. And we believe this is really the right place to be. South Australia is a great place to actually be working and to start off with. And the battery metals is really a good space to be. It's in high demand. That is not going to change into the near to intermediate future. And we have the right people to be behind this, managing this, and setting up the projects. So I'll leave it there. Are there any questions?
Thanks, Colin. A great presentation. We always love it when majors make decisions in boardrooms a long way away, and it presents a unique opportunity for a junior explorer to grow its portfolio and its value. You guys have been in the industry a long time. It's a pretty common story, isn't it, where you see a major lose interest because of a boardroom decision or a commodity decision or some other decision in a boardroom a long way away, but it always throws up a gem for a junior to grab.
Look, it certainly does. And exploration is very different from mining. And to be honest, exploration people do not make good miners. We should sell the project. We should get out before it ever goes there. And likewise, for those big mining companies, they're not particularly good at exploration. Think back to CRA back in the 1990s. The hundreds and hundreds of millions of dollars that was spent on exploration, never to find anything. Whereas the lean, mean explorer has a lot more chance of doing things. So it does provide great opportunities when the majors pick up things, spend a large amount of money collecting things, and then just give it to us for nothing. It's great.
Now, I've got a question from an analyst, so bear with me because I need to make sure that I get it right or I will get a nasty email. Do you have a new perspective, or we use other tools to find sedimentary copper and carbonate-hosted zinc that perhaps others have missed in South Australia? And what is the highest priority?
Okay, the highest priority, because it's the first one that's on the board, is to go out and try and have a look for the zinc at Linda. We have access, I have a plan to go out there and do it. So I'm bringing in a chap called Mark Allen. He was the person who was behind the independent report that was part of our prospectus. And I used to work with him at Pasminco. He's a world expert on carbonate-hosted zinc. So we're going out together to start mapping out this area. It's subcropping, so we know it's there. We are flying some high-resolution orthoimagery to assist in that mapping, and we're also processing and using cluster analysis on various satellite data, much of which is just free to actually obtain at Sentinel. Then zinc is tricky one to ever find. It has no petrophysical properties that really make it shine out when it comes to geophysics. And really, it's a case of good mapping. And like RC drilling doesn't really work that well, so diamond drilling, because of voids and whatever else, is a much better technique to actually be using. That said, some gradient IP could have some potential, and we're working with a chap called Dave McGuinness, who's assisting with all the geophysics as to if there's any good techniques there. On the sedimentary copper, it's early days for us. Unfortunately, most of the ground in South Australia has kind of been blocked off by the South Australian government, who are running a whole number of studies themselves, including drill programs, to build up the whole South Australian story when it comes to sedimentary copper. So yeah, it's a case of watch this space. Focus at the moment is on the iron oxide copper gold and the carbonate zinc.
Now, it was a project picked up by a major, and as you say, majors don't necessarily always make good explorers. Do you think the majors, given the nature of the project, keep an eye on what you and others in the area are doing, particularly what's occurring in South Australia through sedimentary work and other mineral expansion?
I would like to think they did, and it's somewhat remiss if they don't. Surely any business will be looking at, what's going on in your space and contemplating what is the time that you actually approach someone to buy in. If you're dealing with landholders, maybe you have to buy a pastoral station. If you do that early in the piece, but what is that perfectly right time to actually do it? At some point, if you're going to a mine, you're probably going to need that property. If you're looking at the explorers, at some point you need to think about when it is you want to come in, and hopefully that answers it.
Thanks, Colin. A great presentation. Stellar Metals, the one to watch, stock code SLB. Thanks for your time.
Thank you.
Last but by no means least, we have Mai Hughes, CEO and co-founder of the recently listed My Foodie Box, ASX code MBX. With some big announcements in recent days and strong share price appreciation, this will be a presentation you will not want to miss. And for full disclosure, after yesterday's announcement, I did buy shares in the company. Mai, I hope that helped. Over to you.
Thanks, David, and welcome everyone to My Foodie Box. As David mentioned, my name is Mai Hughes and I'm the CEO and co-founder of the company. Before I go on, I just want to give you a brief overview of who we are. My Foodie Box is a meal kit company. We currently source and provide premium and quality ingredients to West Australian households with a strategic expansion plan into the East Coast by the second half of this year. David, if we could skip to slide 3, please. Thank you. Let me quickly step you through our value proposition. My Foodie Box meal kits are about convenience, provenance, quality, and eco-friendly. We help Australian families save time in the kitchen by removing the meal planning and the grocery shopping from their daily chores. They don't have to think about what's for dinner anymore, and they feel good about supporting a local business that genuinely helps them reduce food waste, but also helps them eat fresh, local, and healthy meals. My Foodie Box only uses local ingredients sourced from ethically responsible local farmers and producers, and we pride ourselves on being eco-friendly. All our packaging is either compostable, recyclable, or reusable. And we also offer a unique milkman service where we collect the old box when we deliver the new box to our customers. Next slide, please. So to summarize, My Foodie Box was really built on 3 core principles. The first one was a focus on provenance. The second one being eco-friendly. And finally, offering a healthy and convenient product. We currently have a selection of 23 weekly recipes, but we are about to increase this number to 28 recipes in May this year, and I will touch on this a bit later. Next slide, please. So our love for food guides us in everything we do at My Foodie Box, from sourcing premium produce to crafting our easy-to-follow recipes. We are dedicated to providing our customers with only the very best. And this love for food is very much part of me and who I am. I've had a lifelong journey built on a passion and love for fresh produce and food. My parents opened and they still operate one of Paris's first Thai restaurants, which was established in 1979. So I really grew up working in the family business, gaining first-hand knowledge of food and how to operate a business. And since those early days in Paris, I've since built a career in sales and marketing, working for Fortune 500 companies in luxury hotels, and gained significant experience in how these hotels operate. Next slide, please. So here we have a timeline of key milestones since our inception. We commenced full trading operations in January 2019 with 35 active subscribers. And in 3 short years, we've grown our active subscriber base to over 2,000. Our vision is to expand our services and product offering, targeting an expansion into the East Coast markets during the second half of this year. As you can see, we only listed on the ASX on the 7th of January this year, but since then we have grown our active subscribers by over 21% in that short space of time. And for the financial year of 2021, we achieved sales of 3.5 million, which is a 170% increase on the previous year's sales. But most importantly, this growth in sales was achieved on a very minimal marketing spend. So looking to the second quarter of this year, we're about to implement a very exciting growth strategy, but I'll tell you more on that at a later stage. And next slide, please, David. So this slide shows the significant growth potential in Australia for the online grocery sales and the meal kit market. As you can see, online grocery sales in 2021 only represented 6% of the total grocery sales, up from 4.1% in 2020. While this is still a 46% jump year on year, it highlights that at just 6% of the total grocery market, there remains a significantly untapped market for my Foodie Box to connect with and to grow the business. Next slide, please. So here we have highlighted growth across our key customer metrics for February 2022 versus February 2021. As you can see, all metrics have favorably increased year on year, and of particular importance to highlight is how the growth in active subscribers translate into average weekly sales revenue. So with an average of $132,000 in weekly revenue, the unaudited annualized income is tracking at about 6.5 million per annum. And this compares to reported annual audited revenue of 3.5 million in the financial year of 2021, and almost doubling in revenue year on year. Next slide, please. This graph here highlights the significant growth we have experienced since its inception in 2019. So we hit our milestone of 2,000 active subscribers last week. And now we have set our sights on achieving 4,000 active subscribers by the end of this calendar year, which would come to an estimated annualized revenue of 30 mil. Next slide, please. So how do we attract customers? That's the big question. So we're using various marketing channels, as you can see on the table. We also have a referral program, and we are in the process of launching a loyalty program with our new e-commerce platform, which will be live around June this year. It's really important to note that we have a marketing spend to date averaging at about $34,000 per month, which is pretty much nothing. And as of May this year, so next month, we will roll out our new brand campaign with a budget of $184,000 per month. And we know that there is a direct correlation between marketing spend and revenue. So we expect to see a proportional increase in revenue, which is 5-fold. Next slide, please. My Foodie Box, so we are a subscription-based technology business. We generate our revenue primarily through the sale of our meal kits on a weekly basis. As you can see in the diagram, we use sophisticated systems and software to drive the logistics business. Further technology is being developed and implemented to further improve efficiency and convenience. But due to the business model and the technology we have in place, there is very minimal inventory holdings at all times. And this translates into a high cash flow business with funds being automatically debited from customers. Next slide, please. So my Foodie Box has only been listed on the ASX for just under 3 months, successfully listing back on the 7th of January after raising 6 million in an oversubscribed IPO. With these funds, we have been able to accelerate our growth strategy via targeted marketing, enhancing our technology platform, which allows the business to scale more effectively. And the funds from IPO have also been used towards a new app, which I am very excited about because I know that a lot of our customers are waiting for it, but the launch is imminent. So unfortunately, I can't talk about it right now. Next slide, please. So of particular importance to our growth strategy is our cornerstone investment with Magnet Investments, the parent company of Thermomix Australia, holding about 15% of the company following a strategic 2 million cornerstone investment. As announced yesterday to the ASX, we will be launching in May a Thermomix box, initially for Perth Metro customers. National expansion of My Foodie Box is planned for later this year, at which time we will be very excited to launch out the Thermomix box to the rest of Australia. What this means is a massive growth opportunity for My Foodie Box when considering that over 500,000 Thermomixes have been sold in Australia. And we are very excited knowing that from May, approximately 500 highly engaged and very, very enthusiastic Thermomix consultants in the Perth metro area will be using the Thermomix box to further enhance their Thermomix customers' experience. This is a huge opportunity for My Foodie Box, and I can't wait to keep you updated on how this rolls out over the next coming month. Next slide, please, David. So now I'm about to run out of time, but I'd just like to say that our board is highly experienced across the hospitality, technology, and corporate sectors. We've got our executive chairman, Mai Hughes, who is also chairman of Pitcher Partners Perth and has over 30 years of corporate experience. Non-executive director Guy Perkins has over 25 years of experience in the global IT and brings to us a cutting-edge knowledge of IT. And remember, this is a food tech business with an emphasis on tech. And we've got non-executive director Shane Wee, who has extensive ASX experience, having worked in the financial services industry for the past 28 years. And he is ensuring that we are keeping the market well informed. Next slide, please. So I'm not going to go through all of the individuals in our executive team, other than to say that we have a very impressive and talented executive team with backgrounds from Deliveroo, HelloFresh, Aldi, Aussie Farmers Direct, and they are all highly motivated and incentivized to drive results and great success for the company. So I'll let you read their bios at your own leisure. Next slide, please. The peers, as you can see, the meal kit sector has a number of competitors ranging from multinational groups to local companies such as ourselves. However, in Australia, the meal kit market is relatively new. So the two major players in the Australian market are German companies HelloFresh and Marley Spoon. These companies entered into the Australian market in 2012 and 2015 respectively, and they have played a key role in introducing and educating the Australian market on the benefits of meal kits as an alternative or maybe supplement to grocery shopping, takeaway, and dining out. And we love them because they spent the money educating the market, which we are more than happy with. We started My Foodie Box because we saw the need for a locally owned and operated entrant into the market. And what this table shows is that when you look at comparable Australian-based peers, such as Wide Open Agriculture, there is significant opportunity for My Foodie Box to grow its business in the Australian market. And I'm confident that with our team and our strategy, we will be knocking on the door of the 100 million market cap in the not too distant future. Next slide, please. So why invest? With consumer patterns moving towards a preference for online food delivery and food groceries also being a non-discretionary spend and the second largest household expenditure item behind rent and mortgage repayments, we believe that My Foodie Box is very well placed to continue its strong growth trajectory. We have deliberately designed a highly scalable business model with very low working capital requirements. So our experience and success in WA has given us the blueprint for expanding into other Australian cities on the Eastern Seaboard. And this is planned for the second half of this year. With a highly experienced board and management team, funds in the bank to execute our strategic plan, and most of all, a true passion to fully transform cooking for all Australians, I'm very, very excited of what the future holds for us, for my Foodie Box, and I hope you come along for the ride. Thank you very much, David. Over to you.
Thanks, Mai. A great presentation. And one of the things I love about these webinars and giving investors the opportunity to engage with management is to actually see the excitement management have about their company and the opportunities they have. So the excitement is contagious. So hopefully people put My Foodie Box on their investment radar. Now, we do have a few questions that I'd like to jump to. There are several companies like HelloFresh and Marley Spoon already in the meal kit space in Australia. What separates My Foodie Box from its peers?
So firstly, if I could correct a misstatement in the question where you refer to a number of companies like HelloFresh and Marley Spoon, the reality is that there are only 2 companies in the Australian market, and that is them. So what separates us from those 2? We are local, and we will also be the only Australian meal kit producer operating on a national level. So both these companies are German. We have a strong eco-friendly commitment that absolutely differentiates us. And we believe that this is a huge playing field, being retail grocery, 128 billion a year. So we are a disruptor in this sector and at the very early stages. There's more than enough room for the 3 of us and for each of us to completely differentiate ourselves in our future offerings. And one of the example is actually the Thermomix box. And we have many, many other innovative offerings in the pipeline as well.
Now, touching on Thermomix, what does it mean to have the Thermomix parent as a significant shareholder? And what does the recent partnership agreement with Thermomix mean to My Foodie Box?
So this is an easy and quick one for me to answer. Thermomix has an army of enthusiastic and really engaged consultants. And that army will be promoting My Foodie Box. And just to give you some numbers, 500,000 Thermomix users in Australia, over 50,000 units sold each year. And we think we can obtain a good percentage of those customers because we know how good our offering is and how well it also fits with the customers from Thermomix and their needs.
Can I ask, has Thermomix done something like this before?
No. So this is the first time that Thermomix has entered into a formal partnership with a meal kit company in Australia.
Now, industries have witnessed significant supply chain impacts due to a range of things that have occurred, and it has translated to higher prices. Has this impacted margin for My Foodie Box, and what strategies are you implementing to improve margin with or without these higher prices?
That's a very good question. There is definitely inflationary pressures on all businesses currently, but we have a very talented CFO who is providing accurate and timely financial information that allows us to monitor and manage our margins very closely. We are fortunate to be at the very beginning of an exciting and steep growth curve, which will allow us to improve our margins with scale. So Marley Spoon, for example, currently achieves a growth margin of about 40%, and we are currently tracking at 36%, and we have identified areas for improvement, definitely.
A great presentation, a great product. I'm a user, so I need to put my hand up and disclose that one as well. But a great presentation, a great product, clear expansion plans, an exciting partnership with Thermomix that will be rolling out, and we'll be seeing the results from that partnership in the coming months and years ahead. Exciting times to be a Thermomix shareholder. As I said, I am one, and full disclosure, exciting times. Mai, thanks for your time.
Thank you very much, David.
Thanks, everybody. That brings to the end our formal presentation for this week's Share Cafe Hidden Gems webinar. I hope you found some hidden gems this week. There was certainly some really interesting companies I recommend you put on your watch list, keep an eye on, and follow over the next coming weeks and months. Have a great weekend. Look forward to catching up with you again next week. Tim will be back. See you soon.